Hey there, welcome to the Reinsurance Podcast, the place where we dive into all things reinsurance, the coolest part of insurance. We're your hosts, Jared and Ben, a couple of ex-practitioners who loved the industry so much we founded Supercede to tackle some of its biggest headaches. And we're here to share our insights and stories with expert guests as we uncover what's really going on in the industry.
Welcome to another episode of the Reinsurance Podcast. With me, Tom Spire, standing in for Ben Rose.
Welcome, sir. But we're not alone today, are we?
We're not. We have a special guest with us today, the loss ratio.
Special, maybe a little bit of a stretch, but
we were in sunglasses on this podcast. This is fun.
We just wanted to make you feel at home.
Yeah,
I do appreciate that. I feel very much at home.
I was sort of joking as we got going. The lights get so bright in the studio sometimes. This might be a recurring theme that I go with. I'm liking this quite a lot. So.
You're welcome. You're welcome.
But Curtis, welcome to the show. Super excited to have you on. When we had the hard market on, this was the next episode we wanted the most. Was like how do we go from strength to strength here with people who sort of make cool noise in our space. So really excited to dive into this episode. We always start with sort of how you got into the industry and for you specifically the sort of claims space. So what was sort of the journey into the insurance kind of space for you, and how do we get to where we are today?
Yeah, I like so many people, Jared. I kind of fell into the industry per se, right? Certainly didn't go to school for risk management or anything like that, but I was recruited to by a sales manager to be a captive agent with the Farm Bureau in Michigan. And so that was my baptism into the industry on the distribution side as a captive agent. And I did that for a little over 5 years. And then family life circumstances moved me out to California. And that's when I hooked up with the company that I'm now the president of, 11 years later. So certainly was not something that I expected or planned on, but it is what I live, eat, and breathe every day now. So yeah. I love it.
Yeah, very cool. We know sort of you as a personality as the loss ratio, but tell us more about kind of the work that you do on a day-to-day basis, sort of that company that you're president of. Like, walk us through sort of a day in the life.
Yeah, National Insurance Inspection Services is the firm that I'm the president of now, and we provide underwriting inspection services to personal lines carriers. And so we kind of niche down very specifically on personal lines and really just specialize on single family residential. And so, we have kind of two parts of our business now, right? And we're a decades old company. Mm-hmm. So historically, we have provided field inspection services, right? So we have a nationwide network of independent contractor inspectors. And so carriers, big and small, across the U.S., everyone from the largest tier one carriers all the way down through, regionals and single state mutuals, will contract with us to provide underwriting inspection services for them. So one of their agents will write a new homeowner's policy. They'll order an inspection from us. One of our inspectors would go out, boots on the ground, do an exterior, typically just an exterior, visual inspection of that property. They'd be looking for any specific underwriting hazards or concerns, right, mm-hmm. in terms of liability hazards on the property or pre-existing damage, those types of things. And then they'll gather data for a replacement cost valuation as well. Yeah. And then we provide that inspection data back to the carrier as kind of our product that we're selling to them. So that's what we've done for decades. And now over the last 6 years, we've transitioned really heavily towards self-inspection. So we've kind of become more of a technology company. Mm-hmm. We've built a self-inspection app and platform that essentially removes the boots on the ground inspector from the process and puts the power of the inspector in the hand of a policyholder. So now we enable a policyholder to complete an inspection on their own home and guide them through a process through our mobile app and platform. And there's a ton of benefits that come along with that, really, for everyone involved. So yeah, that's what we do on a day-to-day basis. Ultimately, we are generating and providing underwriting data to personal lines carriers.
Yeah, very, very cool.
Very cool. I think we really like having people in your space on the show purely because of like the number of war stories that they have around like weird and wonderful things. Is there anything that stands out over the last 10 years?
You know, when you are at scale doing anything in insurance, but especially, you know, when you're having all of these personal interactions, right? You've got 1,000+ inspectors that are interacting with literally millions of policyholders, you know, over the years. There's there are plenty of war stories. You know, things happen. You know, when you have those types of things, and we've seen it all. We've had inspectors who have been, you know, accosted, who've, you know, had firearms pulled on them, you know, countless dog attacks and bites, and it's never a dull moment for sure. And then from a business perspective, navigating each one of those situations, you know, is very difficult. And
starting to sound very sensible to take the person out of this.
This mobile app makes a ton of sense now that you say.
And that is, it's very true. We laugh, but it's a big part of it. You know, the reality is, for any homeowner, right? No homeowner wants to have their home inspected, right? Like, again, remember, we're not talking about, this is an insurance inspection, right? This is not a new home purchase, like a mortgage inspection, like the inspection that you have to get to qualify for a mortgage, right? And so when people think of an insurance inspection, it's not something that anyone enjoys or looks forward to, because they think, oh, they're just going to, everyone automatically thinks, oh, they're just trying to raise my rates, right? The inspector's going to find something, and that's going to cause my rates to go up. And generally speaking, that's not true. However, if there is some major deficiency with your property or whatever, that is our role. That's what the carrier is hiring us to do, right? They want to be able to accurately underwrite that property. So, but back to the point is that, yes, like that service that we provide, that underwriting inspection, nobody wants to have a stranger show up at their home and scrutinize their property. When, again, from the policyholder's general perspective, the only possible outcome is a negative outcome. There's not really a net positive for them. So certainly from that perspective, you know, removing that friction point is a good thing for everyone involved.
And we've spoken a few times on this show around like how oftentimes the general public's trust in insurance companies and their motivation and what they're trying to do is really low. And actually loads of your video and social content is kind of speaking on behalf of the industry and dispelling a lot of those myths. Like, is that like the ultimate way out for the industry in terms of building that trust again, like getting in front of people and explaining it to them on their level?
I don't know that it's necessarily the ultimate way out, but it is a big piece of the puzzle. A huge piece of the puzzle, I think, is I don't like using the word narrative because it gets thrown out there so much, and can be a bit cliche, but there's no getting away from the fact that there is a narrative, I think, that a lot of, probably the majority of consumers, you know, ascribe to, because again, that's all that they hear, right? I mean, that's how a narrative is born, right? It's just the repeated messaging, you know, regardless of where that's coming from, and when that messaging is repeated over and over and over, and when there is no counter messaging, there is no voice of reason or kind of voice of truth to bring some balance to that, then that's kind of how we end up in the spot we're at today, when there is, you know, I think an all-time low of consumer trust in the industry as a whole. And to your point, that's one of the things that I'm very, very passionate about, again, is bringing balance, right? And I think that's one of the biggest challenges, right? Because, you know, I like to say that, you know, I'm pro policyholder just as much as I'm pro insurance industry or pro carrier, right? Like I'm pro everyone. I want the system to work for everyone the way that it should, the way that it was designed and intended to work. And so I think a big part of that is everyone taking responsibility for their piece, their part to play, right? Their role to play. And so being pro-industry doesn't mean that we just ignore any of the shortcomings, right? Or the failures or errors that the industry makes, because we're not perfect as an industry, right? No one is. So I think that's where the balance is so important, right? And so it's not a matter of countering, the public's perception and kind of beating them down and saying, no, that's a lie. The industry is perfect. It's like, no, that's not true, right? However, here is what the industry does for society. Here is why it is an absolutely crucial component to our modern way of life. And so, don't to use a cliche, don't throw the baby out with the bathwater, right? If your goal is to burn the insurance industry to the ground, nobody wins there either, right? So, again, I think that balance is key.
And it is, certainly in my experience anyway, like an industry that's willing to laugh at itself from time to time as well. Like, is that the reaction that you've seen?
Yeah, I think so. And I think that's what, I've had quite a few people tell me that, oh, your content is so refreshing, right? Like it just, and I think that's just it. It is unexpected and unfortunately has been quite absent, I think for a long time. So, yeah.
You can see why this is such an easy sort of narrative to persist, though, because if you think about people that we know firsthand, it's incredibly rare that I would posit that most people don't know someone who's had like a total home loss, right? And so most people in your circle, would look at it going, well, I spend several £1,000s a year and I've never gotten anything back from it, and that's true for most of those individuals because the system is designed to work that way, but over time, all it takes is the sort of murmuring and the narrative, as we sort of put it, to be one that's like, yeah, see, there's no value in this, but if that ratio was different, where like every one of us had like someone in our immediate family who had their home burned down but repaid and rebuilt by insurance, we wouldn't see it that way. But you sort of, it almost feels it's inevitable that there's this pushback in an industry like ours because the numbers are designed on purpose to be such that they're only coming in to help intervene when in these severe one-off scenarios, which by their own definition are quite rare for any individual person, right? So but we do the math really weirdly from a psychological point of view, which is why sometimes it needs a different voice and a different direction to sort of knock sense into. That's okay. That's how it's supposed to work.
Yes.
Right. And so you're pushing the rock uphill in some ways.
Yeah, and I do think there's also that's a really great point. I do think that there's also this educational component, a strong educational component, very necessary, because so many people do think, as you just alluded to, oh, I've paid X number of dollars over the years, and I've never gotten anything for it because I've never used it, right? And I would pause it and say, well, wait a second. No, you actually did get something for that, right? It's just, what did you get? Well, hopefully you had peace of mind, right, during that time, right? And the reality is that had you needed it, right, it was there because you paid for it, right? So the cover was there. The fact that you didn't use it doesn't mean that cover wasn't valuable or that it didn't provide anything for you, right? So, again, I think the education around that is desperately needed, and I think that we as an industry can do such a better job of bringing these things to light. And again, I think to your point, I think in the reality today with the culture that we live in, that education has to have a humorous, engaging, there has to be some component there that makes it engaging for people, right? It just has to be there.
Yeah, it reminds me that there's an interesting parallel in just it's general financial literacy, I think, in a lot of ways. But there's an interesting parallel to some of the content now, which is kind of intentionally comedic and entertaining, but around like why mutual funds, albeit boring and slow, are more interesting to you than like getting rich on crypto. And but so many people like, yeah, my grandpa lost this much when the stock market crashed, so therefore but they're going to put their whole life savings into like random crypto. And sometimes you have to sort of point the light and make it humorous, because sometimes just doing the right thing, albeit less sexy, for a longer period is the better decision to be making. But you're wrestling against this sort of weird human psychology around sort of immediate gratification and this sort of the way we perceive risk tolerance and all these types of things, which is fascinating. How did you then transition? When did sort of the loss ratio brand and persona, like walk us through the genesis of traditional, I'm doing inspections and we're building the app out, and to going, you know what, this is the industry needs a voice.
So I became aware of a group called Insurance Nerds. You may be familiar with them. Probably around that same time, around 6 or 7 years ago. And they had just started their podcast, and again, in terms of insurance content, you know, I mean, 6-7 years ago was kind of there was not much going on at that point at all, right? You know, and today there's dozens of podcasts, but there wasn't back then, which is crazy. Like, it was only 7 years ago, right? You're talking about it like it's decades ago, but
we're still in amazement that the title, the Reinsurance Podcast, wasn't taken.
That's right.
We had all these like creative ideas of what we could name it. Like, what? Just the basic one's just free? Let's take that then, I guess. why
we'll take it.
Yeah.
But you know, I was enamored, you know, by that, and you know, was an early guest on the Insurance Nerds podcast, and I had some media background before I, you know, got into insurance, and I had done some work in public access television and had learned a little bit about digital video and editing and whatnot. Yeah, I you know, kind of dabbled in a few things, and I don't even know where the original idea came from or what the genesis was for like the first InsurTech wrap, you know, that I did. But that was, I think, 6 years ago. And this is a little bit of a rabbit trail, but I'll tell the story. And now I hate telling the story because I really self-consciously don't want people to dig back and find that original rap because it is so bad.
It's all right, we won't make you do it. Yeah.
But I made that one, and in the rap I intentionally gave a little nod to a gentleman by the name of Rob Galbraith. He was the innovation director, I believe, at USAA for a long time, and he had just was releasing his book called The End of Insurance as We Know It. Great book. And so I gave him a nod, kind of hoping that he would, you know, run with it and give it a little bit of traction. And I did not know Rob well at all, but I kind of did that strategically, and it worked perfectly because he was making the circuit around the country doing his book tour when his book was published, and he ended up playing my rap like every conference that he went to and every, you know, book event and whatnot. And so I was a little conflicted on it, honestly, because I didn't know how it was going to be received. And from a business perspective, right, like I have all of these relationships with, you know, some large carriers across the U.S., and of course they don't know me as a InsurTech rapper in any way, shape, or form, right? And so I was conflicted because I really enjoyed it, and I thought it was fun and funny, and it was, you know, it really kind of scratched a creative itch for me. But at the same time, I was afraid of how it would be received and what people would think. And so when I first realized that Rob was actually giving this thing some wings, and I knew it was going to come sooner or later, but I was on a call with the underwriting director of a very, very large top 10, you know, P&C player, and and we started the Zoom. It was just our monthly, calibration call with this carrier. And the director of underwriting said, "Hey, Curtis, I think I saw you on a video at a conference." And then he just stopped, and I was just
just let it hang in the room.
Yes. And I thought this could either go very badly or, awkward silence. And then he said, "That was pretty awesome."
No.
I was just like, yes. Everything's going to be okay. Our contract is not in jeopardy.
Yeah. Because there's a general interest in InsurTech more broadly as well, beyond just the stuff that you got. You have a broad interest, and you do the conference circuits and stuff. In some of the way that I'll do it, where it's like just interest and enjoyment of people doing interesting things across making insurance better. What is sort of your thoughts on where stuff is going? What are the kind of trends you're seeing that you're really excited by, or things you see are maybe peak hype cycle and might not go anywhere?
Yeah, I mean, there's so much, right? Obviously, we can talk about AI, but maybe we'll save that. If I'm on a kick right now, which I feel like I am, it is really just around sustainability, mitigation, and that kind of dovetails into what we're doing with self-inspection, right? Because a big part of that is the ability, when a carrier actively engages a policyholder in this process of underwriting, right? Well, let me step back from that, right? Like, traditional world, right? If I'm a consumer, I'm purchasing a new home, I need a new homeowner's insurance policy, right? And so I, call my local agent, or if I go to a local agent, and they sit down and ask me a half a dozen questions, right? If they're being extremely thorough, they might ask me a dozen questions about the house, as they're filling out the application on their computer, right? And I'm sitting across from them. But beyond that, there's really it is very hands-off for a policyholder, right? Like there's really no meaningful engagement, certainly no meaningful engagement around risk management, right? Or best practices for, loss control or mitigation, right? These are all foreign terms to the average consumer. But through self-inspection, we can now engage a policyholder very directly in analyzing their own home, right? And so I'm creating a lot of content around this right now that I'm very excited about. But, as we guide a policyholder through taking photos around their home, well, take a photo of your washing machine hoses, right? Oh, well, why would my insurance company ever care about my washing machine hoses, right? Well, here's why, right? Do you have these old black rubber hoses? These are highly prone to failure, and it could flood your house. It's not a matter of if, it's a matter of when, right? So, hey, we highly recommend that you replace these rubber hoses with steel braided hoses, right? Which are much more resilient. So these are the types of things, that through self-inspection we can engage policyholders, educate them in a meaningful way, and I believe, bring about change, motivate them to action. And again, there are, carrier incentives that can, tie into that to help move the needle and drive adoption. But that's what I'm most excited about right now, because, personally, I wholeheartedly believe that piece is a critical component of long-term sustainability for the U.S. property market anyway. And I'm not highly in tune with international markets, but the U.S. property market is in a bad place right now. It's in a bad trajectory that is just not sustainable. And I wholeheartedly believe that a sustainable future is going to require much deeper engagement and collaboration between policyholder and carrier, to collectively say, hey, we've got to minimize risk here, right? Because if we do not minimize risk, the costs are just going to continue to rise. And, we're already past the tipping point, for a small number of consumers who are just opting out you know, and going bare, as they say.
Yeah.
And that number is only going to rise if we don't do something to change the trajectory.
Completely agree. And what's weird is that probably over the last 100 years, the industry's kind of lost its way. Because if you go back further than that, the very first fire brigades and fire services in the world were set up by insurance companies to make sure that, you know, they were able to prevent bad things happening, and they were able to really help people in risk management and risk aversion, if you like. And I don't know when we stopped doing that.
Yeah, whilst you're in London, if you get the chance, if you're around the city, you will see old insurance company logos and emblems like affixed to buildings, because it was an indication that this building was insured by Sun Alliance, and if it was on fire, the Sun Alliance Fire Brigade would go and put that building out. The other guys would drive right by. That was not our building, right? But there was this recognition that it was created by and driven by this initiative. But I was on a call the other day with someone. We were talking about the U.S. property market, and he was sort of challenging, like, why doesn't, I mean, the market will just have to it'll have to reset. It will have it where people, you just can't get insurance there. And that's a very sort of hard line to take, because obviously you need to be able to protect families, you need to be able to provide a cover that exists there, but a real recognition that if it's going to cost you half the price of the home every year to insure it, because this is such a risk-prone area, then don't live there. And it was this weird, but it kind of, to your earlier comment, was bringing to the fore the real state of the property market, at least in certain geographies or certain areas of the United States, where it's becoming damn near untenable to be able to provide insurance to those policyholders, but then the price that, without sort of mitigation processes in place or practices in place, the cost would be so prohibitively expensive for any normal consumer to afford that what do we do? And the historical position has always been like government intervention, which certainly will have a role as well, but being better at working alongside and collaboratively with policyholders towards mitigation, towards preemptive. Think about, like, we talk about this in aviation all the time. Like, there's a reason why there's so much analysis done to like engines and the replacement and repair cycle of those airplanes, is because they know for a fact that if they stay on those schedules, planes are incredibly safe and don't break down almost ever. Yeah. But if they just don't have those in place, things might come out of the sky. So, like, it's a similar kind of thing with engaging the homeowner community, saying, listen, if we can preemptively support you and have schedules of when stuff needs to be repaired and replaced, that will help us bring overall losses down, helping to reset costs of premiums, and returning us to kind of the ambition that we have as an industry, despite from where we've gone to at the moment at times.
Well, it's like there's so many different industries and sectors that are involved in the solution. I know most Europeans, when they visit the United States, are like quite surprised about the construction methods there. They're like, have you read the story about the three little pigs and the house of sticks?
and I want to pause you there for just a minute. That has been the most striking thing about me, right? This is my first visit to the UK, to Europe, and have visited 6 countries, I guess. Yeah. I don't think I've seen a single frame construction building.
Yeah.
And it's just so striking to me, Sorry.
Yeah.
But yes.
We make buildings out of stones.
And you should be proud of that. Yeah. And I am ashamed that we do not.
But especially in areas that, one of the things I was reading in sort of the California wildfire scenarios was they were rushing out reconstruction, sort of green lighting reconstruction, so long as it was built exactly how it was done before, and they're just automatically rebuilding those instead of submitting new building applications and all those things. But this person was sort of pointing and saying, this is the problem. We should be sitting there going, actually, let's reset this whole section to be sort of built with concrete frames and these concrete sort of walls and structure, because it will make it so much more durable in case of these types of things. But the policy was just to fast track the approvals for ones that were going to do the exact same thing again. Like, it's those sorts of balancing between speed of getting approval through things that will have a longer term, more sustainable downstream impact.
Yeah, I think that it will be fascinating to see how things, are rebuilt, from this latest wildfire disaster. And, to your point, from my perspective, it would be an absolute shame if we do not learn from this event in a way that we've never learned before. And again, it's this is not. I shouldn't say this is, maybe this is an unprecedented, modern event for California, but I mean, we've had some very terrible fire years, right? Mm-hmm. It just so happened that, this one was in a place that got a lot more attention. And obviously the losses were so much higher as compared to the Camp Fire or, mm-hmm. the Santa Cruz fires and those types of things from a few years ago.
One of the interesting things that we've seen from certainly our clients is actually the thing that they were most concerned about was classic car portfolios and fine art specie portfolios, just because of where they were. Like, they think it's probably going to be the biggest fine art loss the industry's ever seen. Yeah. And those parts are, I think, what people are classing as unprecedented.
Yeah, it really is. I think over the next 6 months, kind of as some of those numbers are really kind of come together and are finalized, I think it will be quite astounding. But I do think that there is certainly a massive opportunity for the rebuild of these communities to be done correctly, right? And it's it's not just, I don't think necessarily that we're ever going to get to a place in the U.S. where frame construction is not a thing, and I don't think that's it doesn't need to be that, right? Yeah. We don't have to have every home be a masonry construction, but even for existing infrastructure and certainly rebuilding, I mean, we have the knowledge, the tools. Incredible research has been done around structure resilience over the last decade even. We're talking about, the latest and greatest technological, advancements around, building materials and mitigation measures and things as simple as, ember resistant vents on homes, right? And I talk about that very often because I am wholeheartedly convinced that even just something as simple as that, if there was consistent, widespread, if not universal adoption, right, through building code or whatever the case may be, even something as simple as that could have a massive impact on limiting the amount of urban conflagration that we saw, like in the Palisades or in the Eden Fire.
Well, and this, again, it circles back to the original way this industry operated. Most people don't know, but our industry was incredibly influential in the creation of electricity standards and circuitry, because we knew that candle light in your bedroom was probably not good at scale, especially back in the 1700s and things. But also people implementing electricity and things without any real sort of structure and rules around it was also highly created a huge amount of risk. But so our industry sort of leaned into its position of protecting and mitigating and preventing losses to sort of implement and push for legislation around what those would be. But again, we've sort of moved into a much more commercial model that ignores those things. But it should be this industry mandates. This is these things in these geographies have to have this. No, push it and make it, force it to be the case, because it will, one, drive mitigation, and not only is that more sustainable, but it's better for people. We've talked earlier around the perceived lack of value when you don't have a claim. Sure, but you'd rather not have a claim than spend 6 months in a hotel because your home flooded in a preventable case, or you burnt down when it should have been, a small loss, ended up taking 6 months of reconstruction of the whole property. Those are things that we can just do better if we lean into the role of influence that our industry used to really lean into, and we've sort of backed away from more recently. The questions I started to you with was sort of themes around innovation. And I think this is exactly right. Those are more impactful than what we might see with distribution via AI or something. Like the impact this will have and what will have on the industry writ large will be more around those types of solutions that you laid out, more than, better ability to, interrogate a policyholder's, voice through AI on something. So no, I completely agree with you on that. When you look at sort of the brand that you have now in the sort of the split brand between your core business, the loss ratio business, the apps, like where do you see you growing next and you're taking your business next? What does the sort of next few years look like as you look out on that horizon?
Yeah, it's super exciting. I wish that I could say I had a master diabolical plan to take over the world. I'm super excited about the growth of our firm. I again wholeheartedly believe that self-inspection as a concept, and what we're pushing in that regard from an underwriting workflow and process perspective, again, is a big part of the puzzle piece to some of these broader solutions that we've been talking about. And it solves so many problems with kind of the old traditional model, which just doesn't work anymore. So I'm super excited. We're growing exponentially in that regard as the industry makes that shift away from traditional field underwriting inspection towards self-inspection. So certainly looking to continue to be a part of supporting the industry in that regard and making that transition to a more technological workflow that works better for everyone. So that's super exciting, and we'll see where that goes, in the coming years. I do think that, there is a point in the future where that will be much less necessary as data becomes much more aggregated and ultimately accurate, right? So so that's going to be exciting to see how that how that kind of progresses from a property data perspective, right? Because we're still in an environment today where you have dozens of disparate sources of property data, all with varying levels of accuracy, right? But we're moving towards a time where all of this data is aggregated, and through the use of AI and and analytics, ultimately a kind of a core data set that we have the highest level of confidence in, can come out of that, right? And then that data set can be utilized by any stakeholder, right, to ultimately make the best underwriting decisions possible for a given property. So we're a ways away from that. That's quite a ways in the future, and a lot of things have to align to get to that place. But I believe that that's kind of where the industry is going in that regard, in terms of kind of the property underwriting. And then as far as loss ratio goes, I don't know. I'm having fun. Yeah. It really is it's a creative outlet for me, and for me to have fun with it, be able to express myself creatively, make people smile. I like to create buzz, I like to have fun. But at the same time, I really truly do want to make a difference with it. I want to have an impact. I want insurance to work for everyone. And so if I can do that in a creative fashion, where people are, they're learning, hopefully they're growing, they're maybe being inspired in some way. That's ultimately, that's loss ratio's goal. So I'm gonna keep doing that, and we'll see where the road leads to.
Oh, very, very cool.
Well, you've certainly made us smile.
And you gotta wear sunglasses for the first time. No, it's been a pleasure having you on the show. Thank you so much for taking the time.
I appreciate it. It's been fun, guys.
Thank you.
Thanks for tuning in to the Reinsurance Podcast. If you enjoyed our show, don't forget to subscribe wherever you get your podcasts and leave us a review to let us know how we're doing, preferably 5 stars. For more insights and updates, follow us on LinkedIn and visit our website at supercede.com/podcasts. You'll find the links in the show notes.